Hello and welcome to the weekly commodity market update. I'm Brownfield anchor Will Robinson, joined as always by the University of Missouri's Ben Brown. Good morning, Ben.
Good morning, Will. How are you on this chilly Tuesday morning?
Well, Chili's right. I'm a little cold, but not as cold as I could be. It's about 40 degrees here, but I guess you got it worse.
Yeah, it was 27 degrees when I walked into the office this morning, and I gotta admit, I wasn't prepared for this. I knew we were getting cooler, but as I was walking in today, I thought to myself, I'm cold. I'm flat out cold. And I guess I had a right to be. So, anyways, all's good. It's that
Well,
time of year.
if you're not happy with the temperature in the Midwest, wait a minute and it'll change. And I think this weekend is supposed to get into the 70s. So
Absolutely looking forward to it.
yeah, yeah. So anyway, talking about quick changes up and down. What have we really seen from the crop markets this past week?
Yeah, I'll go through the futures markets real quick. New crop December corn down 15 cents to 683. New crop soybeans up 15 cents to 13.85. Looking at those different soybean components, soybean oil was almost up 2 cents per pound to 66.8 cents per pound. Soybean meal up $4.80 per short ton, finishing at 411 flat. Old crop wheat for December down 65 cents to 861, and the new crop July wheat down 47 cents to 883.
So some movement downward there. What were the big highlights that kind of led us there?
Yeah, absolutely. So ethanol production increased for the second straight week. However, gasoline demand continues to slack. Probably the big surprise last week came in those October supply and demand estimates from USDA, where both corn and soybean yields were cut during the month of October. Export sales continue at a very mundane pace. Uh, just not very strong at this point of the year, kind of like what we normally see. U.S. egg exports were mixed, with soybean seeing a very strong week of export inspections. Soybean crush values reported by the National Oilseed Processors Association were disappointing for the month of September. Harvest continues to roll across many parts of the country as we have good fieldwork conditions. And then winter wheat planting here in the United States jumped 14%, roughly 69% on the week.
So how does that make you smile talking about wheat
I
again?
love wheat. I love all the crops, but I do enjoy wheat. So
So anyway, talking about some of your highlights there, I want to kick off today's conversation around those Friday reports that USDA put out, looking at lower corn and soybean yield projections, both down about 1% from September. So tell me, what's the big impact here? How much will that sway commodity markets?
yeah, both were down. Probably the biggest surprise out of the two was on the soybean side. The market had anticipated maybe even just a little bit of an increase in national soybean yield. The fact that soybean yield came in down 7/10 of a bushel this month was a big surprise, I think, to many people. I want to step back here for just a second and talk about the month of September and its importance for soybean production. So when we think about soybean development, the crop can look really good, but it depends on pod fill as we head towards that development part of the plant cycle, and certainly I think that's very accurate for this year. Heading into the month of September, the August September supply and demand estimates estimated that this soybean crop, was going to have a record tying 71.7 bushels to the acre. That was in August. And I do believe that. And a lot of people would agree that the crop looked very good heading into September. But then it was just very dry. We didn't get the pod development, pod fill, like what we'd normally see. And as a result, we've taken almost 2 bushels per acre out of this crop. You take that times 86 million acres, and now all of a sudden we're looking at 160, 170 million bushels less production just over the last 2 months on yield shortfalls. So I think that is, tightening that supply demand picture quite a bit. It's being offset with some slack, maybe on the demand side, but certainly a tighter soybean picture as we look ahead.
Well, it's interesting to me that the conversation looking early into this year, when we started looking at planting totals, and then moving now into harvest, a lot of the conversation was around acreage. How much will high input costs impact acreage combined with an up ramp uptick in demand because of the Black Sea region issues we've seen there. But really, when it comes down to it, it looks like about 4 million acres, less on planted between corn and soybeans from last year to this year. So what are some factors that are maybe causing that there?
Yeah, so you asked enough questions in that little statement. I think that we could fill multiple of these episodes. Let me start first, I think, with the question about where did some of these acres go? So we did see some competition from other crops. Wheat, for instance, spring wheat planting was experiencing very strong prices as we headed into the spring. You saw rice also, be competitive, cotton be competitive. I think, as we think about 23 acreage. Oh, and the other big one I forgot is prevent plant. We also had, quite a few acres, almost 4 million, I believe. I haven't looked at this month's updated Farm Service Agency acreage data, but I think about 4 million acres of prevent plant across different parts of the country. So, you have to take that into account as well. But when I look ahead to 2023, those commodities are going to remain competitive against corn and soybeans again. Cotton, again, with their challenges this year during their production season, cotton could have the potential to pull back some acres, and then wheat. I think winter wheat plantings are going to be strong. That has the potential to increase double crop soybeans as we head into the summer of 2023.
So really combining the total outlook, when you see the down acreage combined with the expected lower yields, what is that really doing to supply on hand? What type of carry out might we see?
Absolutely. So a tighter carryout that continues. We're also down. I usually consider anything below 3.5% stocks to use on soybeans, anything below 8% stocks to use on corn, to be rather demand restricting, and that's kind of the environment we're in right now. So I do think we are restricting demand. What's that mean? Well, if we had the product, we'd probably use more of it than what we are. And so I do think that is playing into the picture. Couple of things, or one thing in particular I want to mention about supply shortfalls versus demand increases. So when we think about what this means for multiple years of a marketing year, supply shortfalls tend to be rather short-lived in the price cycle, right? It causes prices to go up, but then as soon as South America or the United States has another good harvest, prices come back down. Converse that with a demand increase. When we see demand expanding, those price potentials and those price levels can stay around for quite a while as supply works to kind of balance itself out with acreage battles and technology advances for yield and things like that. We kind of have both going on in some ways, but I don't want to overlook the short-term nature of some of the supply challenges that we've seen globally, both in South America and now here again in 2022 in the United States. Those are rather short-lived in the grand scheme of things, but certainly it's going to require somebody to produce bushels.
Well, and earlier you talked about the quality in the crop in the Eastern Corn Belt, but listening to a conversation this morning between a couple of farmers in Iowa, their local basis was, I think, somewhere around 12 to 15 cents above, I guess, what that futures price would be locked in at. So, what type of issues are we maybe seeing in the Western Corn Belt when it comes to meeting the demand that's out there?
It's a challenge, and we're seeing that play out in the cash market a little bit as those end users work to bring grain to the Western Corn Belt. And it is a challenge, right? And I think that's being exacerbated by some of the transportation issues, high barge rates, high rail rates, potential for another rail strike here in a couple of, or a rail strike. I shouldn't say another rail strike, but we're gonna have that discussion come back around here and again in a couple weeks, I fear. So,
All right, and then moving forward to another topic that I really like to address today, looking ahead to the 2023 Farm Bill. We've had discussions around this generally within the ag community for several months, and it's always around. So, what expectations do you have for the 2023 Farm Bill? Do you expect to see a lot of adjustments or hardly any?
yeah, good question. So we are going to have an election pop up here in the next couple of weeks that, in a lot of ways will be determinant of who's committee leadership as we look forward to writing the next farm bill or as we, look ahead. Um, Committee leadership is very important when it comes to designing and implementing a farm bill. Many people believe it's the entire committee, and in some ways it is, but at the end of the day, it comes down to the four people, the ranking members and the committee chairs that really determine which direction the farm bill is going. So We've got a lot to figure out. They've started the process both in the Senate and the House and the Ag committees. I think the general feeling is that if the Republicans win the control of the U.S. House of Representatives here in November, which a lot of people feel they will. There's some people that say they won't. So I mean, we'll have to see what that balance comes out. But I think the general feeling is if the Republicans take over the chamber, the Farm Bill process will start over, and we'll start from the very beginning, heading into the start of 2023 with new leadership. I don't expect many changes. I think it's hard right now to get many what we call revolutionary ideas through the Farm Bill process. We might see some tweaks here and there. It's also going to be hard to get additional funding to put into this bill. A lot of commodity groups would like to see additional funding, because if there's additional funding, they're not taking program dollars away from other areas. That's going to be challenging, and that all starts with the appropriations committees. So we'll have to see as we look ahead. There's a lot of unknowns still left to figure out. We've got a long way to go.
So maybe a topic we might revisit after the election cycle, get a little bit more information there to discuss. So looking ahead to the rest of this week, we're a little bit back on track, hopefully, when it comes to the dates that these reports are coming out. So what should farmers really be watching for this week?
Yeah, a pretty low week, actually. Just our normal reports, ethanol report and gas report come out on Wednesday, October 19th. We see export sales announcements on Thursday, October 20th, and then Friday, commitment of traders, and also for our livestock friends, USDA NASS's cattle on feed comes out at 2 p.m. Central Time.
So talking about our livestock friends there, if you'd like to learn more on the livestock marketing side of things, you can check out the weekly livestock market update with Brownfield's Megan Grebner and the University of Missouri's Scott Brown. All right, so thank you for joining us all today, Ben. I always appreciate you having you on here. So I'm Will Robinson on Brownfield.